Hello guys. Welcome to this weekly podcast created by Sachin Sawal, founder of Replete Equities. We have started this weekly podcast to discuss some important news and development happening in the market and try to find the levels based on the technical analysis. Before we start, listen to the disclaimer first. Disclaimer: this podcast is created only for educational purposes. There is no liability whatsoever for any loss arising from the use of this podcast or its contents. This podcast is not a recommendation to buy or sell, but rather a guideline for interpreting specified analysis methods. This information should only be used by investors and traders who are aware of the risk inherent in securities trading. For this podcast, we took some content from Wise Money, a weekly magazine by SMC Global Securities Limited. Now let us come to our main content. This is the first issue of our weekly Indian Market Outlook podcast. This weekly podcast will cover the weekly Indian Market Outlook, important levels, sector analysis, a few stock analyses, and option hedging strategies for monthly income. So without wasting your time, let's start with our first segment, i.e. Weekly Indian Market Outlook. Segment 1, Weekly Indian Market Outlook and Important Levels. In this section of our weekly market podcast, we will share the weekly Indian market summary and try to find the trend and levels for the coming week. So read it carefully, and if you have any queries, feel free to send me a voice note through the link in the description. This week also, volatility in the domestic markets continued to rule on rising inflation, possible interest rate hikes, and fluctuating oil prices ahead of the monthly expiry of April series derivatives. It could be seen that foreign players are in a selling mood while domestic investors looked active and have focused on defensive sectors such as consumption, infra, and capital goods. On the earning front, the banking sector is staging a strong rebound with good credit growth and improving asset quality. Going forward, volatility will continue to rule due to weakening global cues. The Fed policy outcome on May 5th will set the tone for the short-term trend of the market. As we are in the results session, we may see stock-specific action in the market. Besides, inflation worries, crude prices, and the war in Ukraine also kept the investors cautious. Let us talk about the weekly analysis and important levels for Nifty first. I have shared in the last weekly market newsletter on my blog that the Nifty is trading in a wide range of 17,500 to 16,800. Despite wild movement this week, the Nifty still managed to trade in this range. That indicated a neutral trend in Nifty. After trading range-bound this week, on Friday we saw a sharp decline in the last hour in the market. It initiates a caution button for the next few sessions. Although the trend looks sideways and the Nifty is still holding its immediate support level, i.e. 16,900, we can't neglect the possibilities of some more downside levels in the coming weeks. On the upper side, 17,572 is the immediate resistance, and a breakout from 17,575 will generate a new buy signal in Nifty. Right now Nifty is trading in a range of 17,500 to 16,900 and there is no clear sign of any directional trade. Volatility is also on the higher side, which is giving a good chance to deploy some limited risk range-bound strategies for the coming weekly expiry. If you don't know how to deploy these range-bound strategies, can learn from our mentorship program. Visit www.repleteequities.com. Weekly analysis and important levels for Bank Nifty. Almost the same setup we can see in Bank Nifty. After a gap down opening, Bank Nifty took support around 35,750, which is acting as an immediate support level, and bound back till its immediate resistance level, i.e. 36,650. Now, these two levels are the crucial zone for the further movement in Bank Nifty. Don't forget that this zone, 35,750 to 36,650, is the reversal zone too as per the Fibonacci retracement tool. so any breakout or breakdown will lead to further levels. Last week's trade is still active. Trade was, an aggressive trader can take a short bet here with a stop loss above 37,500 for the target of 34,800 and 32,800. A safe trader can wait for a breakdown from 3,800. As a safe trader, I prefer to trade with a limited risk range bound strategy here, that I will share in the next section of this weekly newsletter. Derivative analysis of Nifty and Bank Nifty. Once again, volatility gripped the Indian markets in the week gone by as Nifty and Bank Nifty both went through a roller coaster ride. May series began on a negative note as selling pressure was observed in Friday's session across the board, with Nifty seen ending the week above 17,100 mark, while banking index managed to hold 36,000 levels on the local bourses. From the derivative front, put writers remained active at 17,100 and 17,000 strikes, while call writers added hefty open interest at 17,300 strike. Implied volatility of calls closed at 18.45%, while that for put options closed at 19.89. The Nifty VIX for the week closed at 19.38%. PCROI for the week closed at 1.70. For upcoming sessions, you need to remain cautious as the market could get deeper cuts if it manages to sustain below its 200-day exponential moving average on a daily interval. In the upcoming sessions, we expect Nifty to trade in the range of 16,900 to 17,400 levels, while Bank Nifty could sail in a zone of 35,200 to 36,900 range. On the higher side, Nifty needs to give a decisive move beyond 17,500 levels for any further upside. Segment 2, Sector Analysis, Weekly Indian Market Outlook. Most of the sectors are giving the same setup as Nifty is giving and closed in red, except a few like Nifty, FMCG and Auto. Top gainer sectors are FMCG and Auto, closed with a gain of 1.1% and 0.5% respectively, whereas top losers are Nifty Media and Nifty PSE, closed with a loss of 6.2% and 4.4% respectively. Selling pressure has been seen in mid-cap and small-cap stocks too. Nifty Mid-Cap 250 closed with a loss of 3.1%, where Nifty Small Cap 100 closed with a loss of 2.7% this week. In most of the sectors, we can see some profit booking from the higher levels. For the next week, you can keep the Nifty IT and Nifty PSU Banks sectors on your radar with a bearish view. All the sectors like mid-caps, small caps, IT, etc. are in a bearish trend, and we may see some more downside levels in these sectors. The Nifty IT sector has given a fresh breakdown from its important support level, so this could be on your selling list. Mindtree, Intellect, and LTI are the weakest stocks in this sector. For detailed analysis, a few stocks analysis, and weekly option strategies, can visit our website at www.repleteequities.com. That's it for this week. If you have any queries related to your trading, can send us a voice message. The link is in the description. Thank you. Have a profitable week.